Time for our last fireside session of the day now. The sessions today have absolutely flown by. I don't know about you, but what we're talking about finally is navigating the digital payments landscape. That's with Anand Natarajan, TMT and FinTech lead at Standard Chartered. Hi, how are you?
I'm doing great. Thank you for having me today.
No, you're very, very welcome. You have the honour of closing the show today, and it's a huge discussion, this, and that is how you go about navigating the digital payments landscape. So we've got quite a lot to fit into 20 minutes, so if you'll excuse my rudeness, we will crack straight into it if we can. So let's start with a good context question here, because you've got to know the background really. How are Standard Chartered going about leveraging the digital technologies to enhance customer experience in banking at the moment? What are you guys doing there?
Sure, absolutely. So if you look at the way the payments industry has evolved over the past 5 to 10 years, there's been a significant shift in how consumers are making payments and how on the e-commerce side merchants are receiving payments as well. So if you look at our footprint in most of our global markets, we're present in Asia, Middle East, and Africa. These are all countries where there has been a significant shift into digital payments as the primary source of the payment method. So consumers are paying by credit cards and debit cards, but also by alternative payment methods, so like QR codes, directly debiting bank accounts using mobile wallets. A lot of this has caused a significant shift in terms of how e-commerce players operating in these countries are now required to support these payment methods. And consequently, from a user experience standpoint as well, it has now almost become a de facto expectation in many of these countries that when you're going and offering a payment product or offering any sort of service in these economies, you have to be able to support these up-and-coming digital payment methods. Many of them offer instant gratification, right? The use of instant payments in many countries is growing rapidly. So the moment a transaction happens, the merchant wants to know he's getting paid. The customer can see that his account has been debited and he's getting the service that he wanted. Therefore, this shift in the real-time movements of money and the corresponding change in user expectation for instant gratification for any services that are being transacted, I think that's significantly changed how the e-commerce economy has evolved in the past 3 to 4 years. And given the markets that we're in, where a lot of this innovation is happening today, it gives us like a front row seat to some of the more interesting developments in this landscape.
Yes, absolutely. You just reeled off some of those changes there. The amount of change is extraordinary. But what role do you feel digital payments play in driving financial inclusion and also economic growth in some of these more emerging markets that you are so active in?
Yeah, no, absolutely. So I think if you look at the biggest challenge that many governments are trying to solve for in many markets is having the ability for people and individuals in remote areas to have access to bank accounts. What is the quickest way of making that happen? There are some large economies that are solving for this by actually setting up brick and mortar shops in many remote parts of the world. But one thing that many regulators are embracing quite significantly is even if there is an individual in a remote part of the country in some of these emerging markets, they may not have access to a bank, but they still have access to a phone with internet. So how do you take advantage of that access? And that's where the digital banking has really picked up quite a bit. So in enhancing the ease of access to digital banking services for some of these individuals, enabling them to open up mobile wallets in a trusted and authenticated manner with brands that are actually still ensuring that they're complying with all of the financial services norms when they enter these markets, that's critical as well. And we are seeing that companies were quick to adapt to this change and are able to actually now open up these services for individuals on the back of better digital banking experiences, leveraging APIs, and ensuring that you are able to connect and get access to the broader e-commerce landscape without necessarily having to go to a bank or having a bank account. That has caused quite a dramatic shift in how this landscape has changed over the last few years.
Absolutely. As long as you've got the internet connection, the bank can come to you, the financial product can come to you, which is an astonishing change, really, as you say, from having to set up a bricks and mortar shop, so to speak. But let's bring together a couple of those themes that you're talking about there, about how traditional banks can, I guess, stay competitive in these rapidly evolving FinTech landscapes, particularly in these more sort of developing areas. You've got to keep up, you've got to stay competitive. How can the more traditional banks and financial institutions do that?
Yeah, so I think the biggest thing that most traditional banks have to solve for is in ensuring that any processes that they have today continue to become more and more digitized over time. So obviously there are going to be some processes that cannot do so because of regulatory requirements or restrictions, especially in economies where companies or banks are required to ensure that whenever foreign exchange is coming into the country, they need to do reporting around it. So some of those processes can't entirely be removed, but outside of that, whatever processes can be digitized, I think that will be important. We are also seeing open banking pick up space in a lot of markets as well. So banks that are quick to adopt to the open banking standards, and what that basically allows individuals to do is to basically say, if I want to see my bank balance in a particular bank account, I don't necessarily have to log into that particular bank. I can actually use any third-party aggregator service that I want and actually still get details on what my balances are and what transactions I'm doing. More regulators are enforcing banks that they have to adopt to these open banking standards. So I think if you're an early adopter there, I think that will be crucial. And I would say the last piece is, having strategic partnerships with fintechs, right? There are certain fintechs that are going to be quick to scale. Banks that are more traditional and have larger footprint may not be able to scale and adapt as much. But if you have a fintech, who is demonstrating that they understand the market well, are abiding by all the rules and regulations, and are still able to actually scale up quickly by offering a better user experience to these individuals, then banks can tie up with these fintechs and then offer their services through them one way or the other. They're still servicing the end customer. So I think having that flexibility to be able to scale up on your own versus partnerships with fintechs, I think that will be crucial to scaling up your own footprint in some of these countries.
Absolutely. Do forgive me, please, Anand. Are you able just to move your microphone ever so slightly away from your face? I think we're getting a little bit of feedback. If you can just move it just a tiny bit, that's fantastic. Thank you very much indeed. Where I wanted to go next are the key cybersecurity challenges. How do you feel they're facing the digital banking sector today?
Yeah, I would say in the cybersecurity side, I think this is an evolving challenge that banks are still coming to terms with. I think as the nature of the internet evolves, the nature of cybercrime also continues to change. Cybercrimes continue to become more and more sophisticated as banks continue to ramp up their own internal security measures as well. So I would say the biggest thing for banks to keep in mind from a cybersecurity standpoint is ensuring that they are up to date on their customers' KYC at all points in time, having the ability to restrict access to certain services based on where a customer is accessing the banking channel from. I think that will be a crucial angle. So essentially some sort of geofencing. If you know that a customer is based in, let's say, Thailand or Malaysia, that if they're suddenly accessing the bank account from another location, then that is something that should be questioned. And we need some sort of additional authentication or validation from the customer. That's something to keep in mind. I would say in addition to that, the angles around having biometrics it's becoming more and more easier for validating biometric data through your phones directly, and having the ability to integrate that to your banking portals as well, I think would be a crucial way for banks to enhance cybersecurity measures, so that they're ensuring that once a certain biometric identity has been validated and stored on the bank portals, that continues to be like the de facto source for customers whenever they're logging in. And from whatever data we are seeing, it's actually something that customers prefer as well, is ensuring that only my biometrics are being used whenever I'm logging into a bank account. So having that feature built in will be an important aspect as well.
Absolutely, yes. We were talking at length about biometrics in our last panel discussion just before you, so good to add further to that. Another key talking point of the whole event today has been artificial intelligence and machine learning. So let's dig into your expertise on that for a second. How do you see AI and machine learning really shaping the future of banking operations?
Yeah, I would say banks being more regulated industries, we're going to want to significantly enhance our internal policies and processes around banking and AI before we roll anything out to customers. So we will see a good amount of work being put in internally when it comes to solving for certain solutions around how do we improve our own internal processes using AI? How can we implement machine learning processes to, let's say, analyze the billions of rows of data that we get every day based on customer transaction data, and use that to improve our own internal processes first. So I think that's where, from our standpoint, we see a lot of work being put in. And any solution that we roll out which is more customer-facing, I think there'll be a lot more rigor being put into ensuring that it is something that is scalable, does not somehow provide incorrect data, because the implications of that for a regulated industry like ours is a lot more punitive, right? And we want to ensure that we are completely buttoned up in terms of all security measures before we roll something like that out to clients. So I would say, at least for the next couple of years, a lot more of it is internal looking, enhancing compliance procedures, any compliance screening, sanction screening that we do, how can we implement AI and ML into those processes, and eventually how can we enhance the same learning to provide better analytics and end user tools for our customers as well.
Yes, absolutely. Another key question that's come up repeatedly today, which we'll look into now, is about collaboration. What opportunities do you see for partnership and collaboration between the traditional banks, the traditional financial institutions, with really cutting-edge new fintechs in this digital era?
Yeah, so I would say there are two angles where I personally see a lot of interest. One is the creator economy, and the second is the gaming economy. Now, if you look at the creator economy itself, over the past 3-4 years, it has grown multifold year on year. It's expected to reach around $500 billion in total industry size by the end of 2030, so in the next 5 to 6 years. The gaming industry similarly was around $300 billion last year. It is similarly expected to scale and cross $500 billion in the next 2 to 3 years. And what this means is a lot of the creators and the gamers, where they sit and where they're actually buying these services from, they are actually present in some of the more emerging markets around the world, where people have access to internet and people have access to mobile phones and devices from where they can create content. So now the flip side to this question then becomes, if you have creators and gamers sitting in all these markets, how do you solve for payment collections and payouts into some of these markets as well? And that is where collaboration with fintechs sometimes becomes crucial. Banks can always solve for the scale of ensuring that we can move money from point A to point B. But if you were to solve for the customer experience of it, where let's say if there is somebody who has an account with Instagram or Twitter or Google and they want to get paid, there can be a fintech who can potentially offer that service from a user experience standpoint. But then the actual movement of money at the end of the day is managed by the bank on the back end. And marrying these two and having a solution that can actually scale up to more of these markets where these users and gamers sit is where we are seeing a lot of investment on our side. I think the demand is there, where these individuals sitting in these markets no longer want to wait to get paid once in 3 months or once in 6 months. They want to get paid as quickly as possible. And there are payment rails today that exist that allow this to happen, but it will require a good strategic partnership with banks who are present in those markets, who can offer the end-to-end payment rails, marry that with the user experience of the fintech who can onboard these customers, give them analytics on when they're expecting payments from some of these either customers or other beneficiaries, and actually having that linkage where the moment a customer logs onto a fintech platform and says, I want to get paid, the fintech actually works with the bank to ensure the end-to-end payment goes out quickly. I think the volume of payments that can be solved for, where we can reduce costs and friction, I think the opportunity here is quite significant.
Yeah, there's so many priorities there to navigate, which is very much the theme of this whole conversation. Just want to touch, if I can, on regulatory compliance. I know you've mentioned it briefly already, but let's look at slightly more depth about that, about how important regulatory compliance is in really fostering both trust and innovation within digital banking.
Yeah, I think it goes without saying, right? Regulatory compliance is the backbone of any solution that you either a bank bills or even a fintech bills. And I think we've all seen cases of fintechs who've been too quick to scale, who've not necessarily had the regulatory compliance be the core of their product offering, that have eventually failed because of either missteps from a regulatory standpoint, or because they've suddenly realized that the funds are not where they were supposed to be. You have issues where user funds are commingled with corporate funds, and therefore that is not actually that's putting the fintech in a bad situation where they're no longer able to meet customer obligations. So you want to steer clear of that, and I think there have been enough missteps in the past from other players that we can all learn from, and ensure that when we are actually now rolling out a new solution, we have a full understanding of what are the regulatory requirements in that particular market where the solution is being rolled out. Just because you roll something out in US doesn't mean it will work like for like in Europe, doesn't mean it will work like for like in Singapore. Even within Europe, just because you roll something out in Germany, the Netherlands may have some other requirements around bookkeeping or how you're solving for customer funds. So having a very strong understanding of the regulatory environment is crucial. And we are seeing a lot of fintechs take the right steps in this direction, where they are hiring regulatory compliance officers with the right background who are coming in either from the industry, from the regulators, or from banks, who can bring that expertise to rolling out a new product and ensuring that it is actually scalable when you launch the same product in 5 or 6 different markets without actually having regulatory missteps. From a bank standpoint, I would say that whenever we work with fintechs, the longest part of due diligence, and I'm sure some of the fintechs listening to this will agree as well, is the onboarding process, where before we onboard, we have to spend a significant amount of time working with the fintechs to understand that, for us to get comfortable, rather, that they are following all the right steps needed to ensure regulatory compliance. They have all the KYC information on the clients. They're rejecting the wrong type of clients that they don't want to service. And only once we get comfort on all of those points, then we onboard the fintechs and actually work with them. So I think it goes hand in hand. It will continue to be important. And the more payments start to become frictionless and cross-border payments become easier, the more regulators in those countries would be vested to ensure that any payments coming in or going out of the country are happening for a legitimate purpose. And only the right solution that you put in place would help solve for many of those requirements down the road.
And finally, Anand, one last question, if I may. I do appreciate your time so far. Is I can guarantee you that if we were doing this in person in front of a live audience, sort of in the room, one of the first things that comes up when you come to the Q&A, the first hand that'll often go up is about a bit of advice, really, particularly for younger professionals, maybe earlier on in their sort of financial or payments careers, fintech careers. What advice would you have in terms of career development? Is it really making sure that you are a master of this digital landscape? Is that where you've got to really have expertise? What would your advice be to them?
Yeah, I mean, it's an interesting one, right? I mean, if you ask me when I joined the industry 16 years ago, if this is what I would be doing today, I would have said no. I probably wouldn't know half the things that exist today, right? And it's probably even more true 5 years from now. A lot of the payment terms and methodologies we're considering now may not be that relevant 5 years from now. So I don't think the answer here is to try and understand everything about something today. I would say the right attitude and mindset would instead be to understand what is the ultimate business problem that any business is trying to solve, and what is the most efficient way of making that happen, right? And sometimes that could lead itself to the evolution of a new payment method, or sometimes that could lead to some new business idea that you yourself could then go and start. So understanding the pain points in any business process that exists today, I think still continues to be and will continue to be the main sort of source for innovation and new ideas going forward. So I would say just have that inquisitive mindset. Take a problem that you suddenly see in the economy, but it doesn't matter if it's big or small, and try to understand how is the money moving, right? Especially if I look at it from a payment standpoint, how is money moving from point A to point B? Who are all the people or intermediaries in the entire chain that are touching the money? Can that process be done better? If something is happening a certain way today, why is it happening that way? I think once you understand this, I think you will invariably come up with either a better idea or a better understanding of why certain things are not as easy to solve as it may seem. And I think that will help in the long run when it comes to new payment methods as well. Obviously, one of the big changes we're seeing in the payments industry overall is the increasing use of blockchain, right? With 5 years ago, banks were sort of generally toying with the idea of blockchain. Now more and more, we're starting to see potential real-life use cases for it. And all of this comes not because we want to use blockchain, but instead we're trying to figure out, okay, is there a problem that blockchain can actually solve? Yes, we did find a couple of problems in terms of ease of movement, and we now want to see if this is something that is scalable. So just a couple of weeks ago, we recently announced that we did the first blockchain euro transaction on a pilot basis with a certain client, and we now want to see if this is something that can be scalable. So the industry will continue to evolve. I think having the right mindset around understanding the pain points, finding the business idea that helps solve for those pain points will continue to ensure that you stay in the game and continue to upskill yourself down the road.
Anand, thank you very much indeed. It is looking a bit further forward. I know from my point of view in my line of work, I go back to speak to some students studying some media and journalism at my old university, and I tell them I used to get media releases through the post, and they look at me as if it was written on a cave wall somewhere. So things change and you have to be ahead of things. Thank you so much for joining us and closing the show here. You've brought together so many of the themes that we've been discussing inside 20 minutes, so you could not have planned that better. And thank you so much for joining us here today at FinTech Live New York.
Awesome. Thank you so much for the opportunity.
It's been a pleasure.